Welcome everyone. Take a look at this. We got a little bit of profit taking a little bit of profit taking going on leading into Fed Day on the bond market. You're seeing bond yields actually rise a little bit in just the last 24 hours going into the Fed meeting. Not a surprise because you've seen a big sort of run on bonds over the last few weeks. So not a surprise to see a little bit of profit taking right before the Fed meeting as people get a little nervous over, are we going to get a 50? Are we going to get a 25? Are we gonna get a dove? Are we gonna get a hawk? Now remember, right before the Fed's blackout meeting, we had a little bit of uncertainty. In fact, we were only looking at about a 14 percentage point or 14% chance of a 50 basis point cut. That changed when we got Nick T and Dudley and some of the other friendly Fed boys to come out and suggest, the time has come to go 50. So now the question is, all right, cool. If the time has come to go 50, is the market going to believe that you're going to go 50? We saw odds of a rate cut yesterday, a 50 basis point rate cut move all the way up to about a high of 72.5%. It never ended up going any higher than 72.5%, and right now it does sit at 69.2%. So we'll see what we end up getting, but there also hasn't been any sort of resistance from the Fed suggesting that we're going to get pushback on this 50 basis point prediction. And it somewhat suggests we'll probably end up with 50. It's one of the reasons why I'm leaning towards a 50 BP cut, but we'll obviously find out within a few hours. Now, the other thing to consider is most traders are so uncertain that we're probably closer to 50-50 on what people actually think we're going to get in terms of a 50 BP cut. This makes potentially buying the dip on either bonds or even some interest rate, more recession resilient sectors, potentially interesting right before the Fed meeting. So I know some folks are like, okay, well, if we get 50, is that going to be more of a boon to like a Tesla or to an Enphase? If I had to pick between the two, I'd probably lean more towards Enphase, given that Tesla's already offering those interest rate reductions. However, of course, that would build into Tesla's margins, so certainly doesn't hurt. I don't know if it'll lead to more demand for Teslas, though, but certainly the whole solar industry is something that has been left behind with higher rates. But then again, you have to ask yourself, is 25 basis points really going to make a difference? Is 50 basis points really going to make a difference? Probably not. Anyway, in the next few seconds here, we get housing starts, and they beat. They come in at 1.356 million starts. It's up 9.6% month over month. We were looking for an increase of 6.5%. And building permits month over month just came in at positive 4.9%, better than expected, with a 1% expected growth. And we had a better than expected revision going to just last month, negative 3.3% versus the negative 4% that we were previously told. So better there on housing starts and building permits on both the revisions and the current data than expected. That might all sort of go into what we've seen with, it will, but obviously not yet at this point, but retail sales and some of the other data that we've been getting. A lot of this is all helping lead into the current Q3 estimate for GDP sitting at 3%. That is at 3% on September 17th, yesterday, up from 2.5% September 9th. Now, keep in mind, GDP is backward-looking, so you're looking at data for the third quarter. This is a real-time estimate of the third quarter, but it's an estimate based on data from July and August. So we are looking into the rearview mirror, but not as much, right? You're really only looking back about an average of 6 weeks. So it's supposed to be more of a current outlook. And this is one of the reasons a lot of people think, oh, we're gonna only end up getting a 25 basis point cut because, GDP's running at 3%. This is crazy. I personally think there's a greater chance, and this creates some risks in itself, but I think there's a greater chance of getting a Fed that says, hey, we've made no commitments on prior meetings, or sorry, on subsequent meetings here coming up, but, we're going 50 now, but maybe we'll skip next time. I have no idea how the market's really going to respond to that. I would suspect that if we get 50 now, markets are going to price in odds of another 50 to 25 in the next meeting. I don't think that they'll actually take Powell for his word on it, that we'll end up getting 0 in the November meeting. While it's possible, I don't think it's likely, and I don't think the summary of economic projections will forecast that either, but we'll see. But this is a pretty nice and warm GDP read currently. So it doesn't really suggest recessionary figures at this moment. Now, there's plenty of other stuff that, suggests recession, whether it's the increase, the slowdown in job openings, the increase in the unemployment rate over time, the slowdown in ISM manufacturings, but that's been going on for a while. The slowdown in ISM services, which even though they're in an expansionary territory, they're way slower than where we've been in prior expansionary cycles. So it's all just a big mess right now. Put it that way. I think that's the easiest way to put it. It's just a big mess. Anyway, let's see what the big movers are here. Let's see here. Pre-market. All right, so pre-market, you got 23andMe down 10%. This is as the board quits, and the CEO is like, I still want to take it private. And the board's like, you haven't found any reasonable path to actually pull this off. And now the board has quit. So she's like, all right, I'll get a new board. Oh, no. Oh, no, 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 no. Flipping around to gainers, you actually got Red Robin that was up 16% yesterday after that retail sales data, down up 3.7 here in pre-market. This is a walking bankruptcy basically, but this shows you the risk of trying to short a company that's going bankrupt. I'm not short Red Robin, but I've been looking at Red Robin's financials. I'm like, man, if the rest of the restaurant industry looks like this is bad. If you want to look at, like, you want to do some homework and you want to see what a coming up bankruptcy looks like, look at the Red Robin Gourmet Burgers fundamentals. It's really sad. I mean, they have more locations than the Cheesecake Factory. How crazy is that? Now, obviously, a lot of those are leases, and they've been selling off real estate that they've owned, mostly to try to finance staying alive, which is also sad. But, oops, I guess in the short term, even a poopy company can have some too, right? Tupperware is now suspended, but I mean, it memed for quite a while, and now it's sort of in this permanent halt after dropping from, $1.20 down to 50 cents, and then it's essentially now sitting on the delisting deck. Anyway, Tesla's up about a third, and it's still sitting, look at that, it's still sitting under 230 here. And then with the Qs and do's, up about 16 basis points, but also sitting under that 476. So what's J-Pow going to do to us today? I mean, we did yesterday have one hell of a rally in the morning, but look at how we lost that rally going into the end of the day. I really think this is the profit-taking pre-Fed, right? I mean, think about it. If your stock is running or your bonds are running pre-Fed, why take any risk waiting for J-Pow? Just take profits. Now, I don't think that's the right answer for everyone, right? A very short-term trader, like a swing trader or day trader, might absolutely take profits, and there's nothing wrong with that. Somebody who's more in a longer-term trade, a hedge trade, a longer-term swing trade, they're going to look at this as a buy-the-dip opportunity, is my guess. So we'll see. Okay, I'm going to make sure I got that right. Yeah, perfect. All right, good. So what's next? Yeah, I mean, let's see if Nick T has said anything. That would be interesting. All right. Well, the front page of the Wall Street Journal is, the Fed rate cut is here. Yeah. Well, I'd like to see, oh, that's interesting. They did a whole video interview with Nick T. Well, let's listen to it and comment on it. This is a great idea. Okay. I haven't seen a video interview with Nick T in like forever. This is great. This is like a treat. Okay. I'm not even prepared for this.
The Federal Reserve has been climbing a mountain to combat stubborn inflation, so fast that it raised its benchmark interest rate 11 times in 16 months, then left it unchanged for more than a year.
Now is a make-or-break moment for the Fed. There aren't people who want to raise interest rates anymore.
While prices have
That's
cooled,
also a good point. Like, nobody's talking about raising rates anymore, which is fantastic. So, you know, what Powell said is right. The direction is... Ow! The hell? What does that fall? Anyway, the direction is clear. Now it's just a matter of, okay, are we going to, you know, what magnitude are we going to move in that direction? All right. Dude, micro USBs suck. Hold on a sec. Just stick it in. There we go. Man, I never get the direction right on those. All right, here we go.
Uptick in unemployment has reignited warnings of
a recession.
And so the question now is, can they stick the landing?
The central bank likes to keep inflation around 2%. That
somebody here says, is that a Horde logo on your shirt? Yes, it's for the Horde. Look-ta! That's complete BS. The Fed is holding a steering wheel without linkage. The market is in control now. Welcome to the end of the monetary regime and the start of the fiscal regime. Okay, so you're basically saying, like, Fed has no control, you know, the U.S. has too much debt. I mean, not really, man. If you look at, you know, federal interest payments as a percentage of debt, this debt's nothing, you know, compared to what we even saw in the 90s. And the 90s was fine. So, you know, I don't know about that. I think you might be a little early on the whole fiscal collapse thesis there. But anyway, you know, as they lower numbers anyway, housing numbers. Well, you missed it. I covered housing numbers as they came out. I can't go back for you. You can hit back. Hit the back button on your video. It's there. This is literally a recorded video. There, let's keep going.
became a problem in the aftermath of the pandemic. Prices grew well above the 2% mark, eventually surpassing 7% in 2022.
For the last 2 years, inflation was the big emergency that was occupying all of the Fed's attention. When the Fed was raising interest rates, they thought the economy was going to have to slow down a lot more than it.
Oh, this must have been the last meeting because I don't see Nick T next to the New York Times smiley eye girl. Roberto, so you're okay collecting over $1 trillion of hardworking people's money just to pay interest? Really? Bro, I didn't say that. The reality is what it is. The government's dysfunctional and spends money it doesn't have. Congratulations. You think one person's going to change it? It ain't going to happen. Do you think people really have the appetite for paying off the debt right now in this sort of economic environment? No, it ain't going to happen. And C, so I just said A, B. C, the reality is if we can actually just get the economy back to really substantial growth and expansion and an increase in productivity, this debt will be worthless as our economy explodes with growth in the longer term. It's probably the easiest way to get rid of debt and to keep the Ponzi going, so to speak, is just by growing. Just outgrow the debt.
I wish there were a completely painless way to restore price stability. There isn't. And this is the best we can do.
And what's happened is the economy's done pretty well and inflation's come down anyway.
By July, the Fed managed to bring inflation closer to 2.5%. And with prices easing, economists have turned their attention toward troubling signs in the labor market. The U.S. economy added 142,000 jobs in August, a slight rebound from the summer's slump in hiring, but
Oh, just wait for the revisions, which will come out in 2 weeks?
Notable decline from a year ago.
The cooling in labor market conditions is unmistakable.
It's harder to stop a rise in the unemployment rate once demand for workers has cooled. I mean, what you're seeing right now is businesses saying we just don't need workers the way we did a couple of years ago.
The Fed can try to avoid...
Yeah, and this is what I call inertial, by the way. You know, and I feel like that's a word, but when I look it up, apparently it's like an old word or whatever. But see, I'm trying to say like having inertia, right? Inflation doesn't really have inertia beyond, you know, catching up to whatever level of money printing you've done. Like you print a crap load of money, yeah, it feels like there's inertia of inflation going up, but really what you're doing is you're just lapping the year-over-year figures of price increases, and it's kind of like you print the money, the prices go up, and it kind of almost takes like a year-over-year period for insurances to catch up, stores to catch up, and for everybody to actually raise the prices. With jobs, like some job cuts beget more job cuts. It's not like some inflation begets more inflation. Like if you printed so much money that you're going to have 9% inflation, that 9% inflation is kind of like a wave, and it has to flow through the economy. But then you're going to get the 9% inflation, and then the year-over-year numbers come out a year after that, and a year after that, and they start going down and down and down as you sort of normalize, like that 9 or 20% or whatever that you had to push through the economy, that gets pushed through. But say it's even 30%. You know, some things are up 30% since before the pandemic. Once you have that 30% inflation flow through, you actually, you know, unless you're still printing money, you actually have this potential inertia of the opposite happening, which is, okay, cool, prices adjusted up because you printed so much. Now prices adjusted up, now you're there, and now inflation's at 0 or like 1 or 2% because prices have adjusted up. Now they stay at those high levels, or they slightly come down, some slightly go up, whatever. And great, now you're at this higher level. It sucks, but it's not inertial. It's not like that 30% led to another 100%. I mean, that's what happens when a currency systems collapse and you have a lack of trust in the government. And I'm not saying that you have trust in the government, but I'm saying en masse, we trust the dollar more than anything else. But as far as layoffs, the unemployment rate goes up 1% or 2%. It's likely to go up 3 or 4% because those layoffs lead to weakening, which leads to more layoffs. That's why I call it inertial. Well, let me see Clarita really quickly.
Continue. But in terms of measuring that effect, it is difficult to do.
Hey, Rich, let's talk about another balance sheet. So that's the U.S. government's balance sheet. Front page of the Wall Street Journal.
This is for Roberto.
Presidential candidates are talking about spending increases, tax cuts, that is going to make it an even more difficult proposition. I mean, the Fed is there to be making sure that it's watching one side of the balance on the sheet on this. The federal government does the rest. How much harder does it make the Federal Reserve's job when this is happening? Do you worry about rates kind of getting out of control and the Fed not having as much control over things because of these huge concerns? So
Becky, you're absolutely right. It's really mission critical, and there are really two parts to it. The one is that big budget deficits, and the CBO numbers are really depressing. Regardless of roughly what happens in November, the baseline projections are 6% budget deficits as far as the eye can see. So that obviously makes the Fed's job harder because it supports aggregate demand. On the other hand, we've got 100% of GDP of debt outstanding, $30 trillion of treasuries. You know, you were kind enough to mention my time at the Treasury 20 years ago. In those days, treasuries outstanding were about 40% of GDP. So now it's 100. And if anything, that tends to put upward pressure on bond yields because people have to be compensated to hold all those treasuries.
Right, so you can try and lower rates, but good luck selling it.
So absolutely. So big budget deficits and big stock of debt does complicate the Fed's job. Now, they have the ability to offset it, but it is an input into their assessment. It should be. So,
but a much trickier job for the Fed.
Yeah.
In the days to come. Rich, thank you. Rich,
thank you as always.
That's it.
All right, coming up is AI ready?
Boring. All right, let's go back to this.
Avoid further erosion by cutting the federal funds rate, or the rate that commercial banks pay when they borrow from each other. Those cuts, in turn, can lead to reduced rates on loans, meaning lower borrowing costs for consumers in the form of mortgages, car loans, and credit cards.
I mean, this is all generic. Keep in mind, as soon as the Fed cuts rates, you're probably, like, I bet you companies that have money market funds or whatever, or savings accounts or whatever, like a Robinhood savings account or whatever, the email is already teed up. And the second rates get cut, you're going to get an email going, your deposit rate has been lowered.
They can also create an incentive for businesses to invest in expansion and hiring.
The Fed can cut interest rates for two reasons. One would be you're actually trying to stimulate the economy. You could also cut interest rates, including in the current situation, just because they don't need to be as high as they've been. You don't need to slow down the economy as much as you had over the past year or two when inflation was much higher.
Back to the mountain that the Fed spent the last 2 years climbing. Starting from historically low interest rates near zero in early 2022, the central bank eventually hiked to rates between 5.25% and 5.5% by July 2023, and stayed there.
Now they're coming down the mountain, but nobody really knows where base camp is going to be. How far down are you going to go, and how fast should you get there?
Fed officials have largely agreed on the path forward since June 2022.
Like the
but
mountain.
now, two routes down to base camp have emerged.
Earlier this year, you heard a lot of people saying, look, this economy's doing all right. The economy's adding jobs, the unemployment rate is at a historically low level. Why rush this? You have a Fed Governor Mickey Bowman, the Kansas City Fed President Jeff Schmidt saying,
I still believe quite strongly that we really need to trend this inflation number towards 2. It has to be sustainable.
the danger
It is trending towards 2, you nut.
is that if the labor market starts to weaken a little bit more, it could weaken a lot more, and then you're having to cut more aggressively.
The other camp argues more aggressive rate cuts could preempt a serious decline in employment.
Now that you have the labor market slowing down, these people are saying, let's get ahead of this. Let's not have a recession that isn't necessary to finish the job on inflation. There have been a number of Fed officials, the Fed Governor Adriana Kugler, the Chicago Fed President Austin Goolsbee, who have been more
Goolsbee. Why do they always get pictures like that of him? Oh, because those are the only pictures he takes. Oh.
insistent in saying,
We've got to keep our eye on the employment side of the mandate now. This is what the path down to 2% inflation looks like.
the danger, of course, of going too fast is, well, what if some new shock hits the economy and inflation kicks back up? That would be very destabilizing to have interest rates go back up, for the Fed to say, whoops, we cut too much. We need to start climbing this mountain again.
The Fed is expected to cut.
That is not going to happen unless the Fed really screwed up. To have to raise rates again would be poopy doopy. That's why I really think the Fed's going to be in a place where, like if I'm J-Pow today, I'm going, look, we're going 50. We don't want the labor market to cool anymore. We are well above the neutral rate. Inflation has come down such that even with a 50 basis point cut, we are still well within the level of restrictiveness, likely 2% above where the neutral rate is right now, at least. Which frankly means even at a 50 BP cut, we're still restrictive against inflation. We're just trying to become a little less restrictive to, as Nick Timiraos said, preempt further declines in the labor market. Remember, you just take the difference between where the Fed funds rate is and where inflation is. Okay, PCE is at 2.5. If you cut 75 basis points right now, you'd be at 4.5. You'd still be 2% above where inflation is. That's crazy. It's really, really tight and restrictive. So it's why I lean towards that 50 today.
Cut interest rates by at least a 0.25 percentage point at its September meeting, though some investors think a larger half-point reduction is still possible after the August jobs report.
A 25 basis point cut signifies that the Fed is now beginning to take back the rate increases that they made last year, and that we all know the direction of travel now is towards lower interest rates. A 50 basis point interest rate cut signals more urgency here, and so there'll be big questions now around, well, do you expect to do this again in November and in December and early next year? How fast do you think you're going to take back the interest rate increases that you made in 22 and 23?
Regardless of the Fed's decision, a lot remains at stake for the economy and Powell in the months ahead.
It would put Powell on the Mount Rushmore of central bankers if he can stick the landing.
Mount Rushmore is central bank. I mean, he's right. I mean, this is like me saying if he can stick the landing, it's like people are going to put, statues of him in their front yards.
Economy just going through a soft patch? Or is it falling into the recession that has been long predicted by many economists? The next 6 months could be pivotal to determining which of those we're seeing unfold here.
Yep. That's why if they cut 50, they could potentially have a chance at getting ahead of this. But I totally agree. Like, in fact, I think I said it yesterday. I think I literally wrote it yesterday to course members about the next 6 months. Because, you know, we were looking at some leaps that are like 14, 15 months out versus 27 months out. And so we're reviewing different trades and hedges and plays and blah, 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 like we always do. And, I said within the next few months. Oh, okay. Yeah, I wrote down, I don't think I need that much time. If there's no recession indicated within the next few months, you know, was my commentary. So, but in my head, that's interesting. In my head, I was like, 6, takes you to March. February is probably more, I think, what like the most you really need. And you should have plenty of data between now and February. That's 5 months, so I think that's why I went with few. And why that popped in my head. But anyway, very interesting. So, yeah. I mean, like, you know, worst case scenario, just do no rate cut in November. Then you had 225s, right? But if you kill the labor market between now and then with the labor report you get in October for September and the labor report you get, you know, in November right before the election, these are things to pay attention to. Could be oopsie doopsie. All right, let's listen over here.
And I don't want to say NVIDIA because NVIDIA has the numbers to back it up. But we've seen other euphorias. Let's go back to the 1990s with the dot-com bubble. You wouldn't necessarily see that. It doesn't make sense because it is emotional. Would you just steer clear of any of those things? So you miss it on the way up and you miss it on the way down?
What I think is interesting about AI for this use case, large language models, they do have the ability to incorporate some qualitative elements to it. So they do separate emotion, but they also understand, I think, the context of companies beyond just the numbers. So again, it's not just quantitative. And even in our current portfolio for Livermore, one of the top picks is Meta, so an AI company. But what AI has said to us, what our committee has said is it's not just about the numbers, it's also that Meta is one of the few companies that has actually seen a benefit from AI in its numbers. It's seeing it through better ads, it's seeing it through better engagement on Reels and Feed. And so the AI can actually see things beyond just what's happening with the numbers and say, hey, this company kind of fits this paradigm for this reason. From a quality.
But it has to have the numbers there to back it up.
It needs numbers, but also because it has such a vast array of training data where we're relying on these models like GPT, like Gemini, it does have a broader understanding of the world. You know, anything that's on the internet, these models basically have an understanding of, and so it can pull in that information as well.
Dr. Spock was really, history is not treating him well.
I did not verbalize my beat.
All right, that was a little boring on AI. But you know what a like real harsh diss right here on Elon would be? Elon pooping on Mark Cuban because Mark Cuban's like, I want to buy X. And Elon Musk is like, sorry, Mark, your card got declined. I bought X for $44 billion. You're $39 billion short. Googling his net worth per fortune. And, you know, a good reply here from Mark would be, don't worry, it's worth less than 5 today. Honestly, probably it's... I mean, the current estimates are that it's certainly worth at least half of what it used to be worth. But it could be even less. It just sort of depends on the advertisers. But then, you know, you have to look at Elon. Look at this. I'm just kind of watching here. The markets, both bonds selling off a little bit, and Enphase actually doing well right there by the 118, 119. But you're seeing some profit taking on some of the things that have run. You know, even 1.5 there on Palantir. But anyway, this is the parody account. Oh yeah. You're right. My bad. But anyway. This would be a funny reply from Mark Cuban anyway. So thank you for catching that as a parody account. Usually I catch that. It's so confusing. But usually I catch that as a parody account. But anyway, I do think that would be a funny reply anyway. But when I go to actually Elon Musk, one thing, see, like, I actually like that kind of humor, like the money humor. I think that's funny. But unfortunately, what you're finding with Elon, I thought this was really interesting, is he is now so hardcore. Where is it? Trying to find, dude, he tweets so much. Where the heck is it? So hardcore, leaning towards Trump and Republicans. Let me see if I could just Google it. Let's see here. Oh, yeah, here. I think this is a bad idea, Elon. Look at this. Right here. Unless Trump is elected, America will fall to tyranny. Trump must win. Dude, this is crazy. Like, Elon, let's be real. Yeah, we're gonna have slightly different policies on foreign affairs and on, government spending or whatever, but are we gonna fall into, I hear Democrats, they're like, oh, we're gonna have a dictatorship if Trump is elected. I don't think so. And then now I hear from Elon Musk, oh, we're gonna have tyranny if Kamala is elected. I'm like, I don't think so. This extremeness is insane. I like this, actually. Investing Rob, who's this part-time investor. Oh, hey, Investing Rob follows me, and he's a real estate investor. Let's go, heart. And he replies, X has just become right-wing propaganda. I miss old Twitter. Honestly, I think you know me. I know people, everybody's like, oh, you're a lefty. Oh, you're right. I think it's funny. I get alleged that I'm left or right all the time. And it just reiterates that I'm actually pretty dang well in the middle. But I actually think most of you are pretty dang well in the middle, too. But, Elon's just sounding like a, right-wing weenie baby. And I'm not saying that being right-wing makes you a weenie. I'm saying he's everything that's slightly anti-right-wing, he gets upset about. And it's like, oh, chill, man. That's called politics. Everything can't be perfect. Look at this. Trending well. Takes a screenshot of an electoral college map per Nate Silver. Okay. Trump is trying to steal your democracy by running for office. Meanwhile, Democrats are importing millions of fake asylum seekers to political battleground states to create a one-party democratic rule. And I know a lot of people are going to go like, oh, well, that's true, or whatever. It's like, well, Elon, let's share, citations and data. I don't know. It blows my mind. And then for somebody who's trying to sell electric vehicles, I don't get it. I don't know. I guess I just really don't get it. Always be cheating news about ABC. It's crazy. I don't know.
A very quick final check on the markets before we hand things off to Squawk on the Street. Futures are about where they've been all through the morning. Treasury, the yields there have moved a little bit higher on this. You can see 368 is the latest.
Yeah, I don't see people. I see people. Oh, Kevin, you should study history. You should study how people take power and they become tyrants. Bro, come on, man. Have you only studied other countries? Have you not studied how our Constitution works, how the checks and balances system works? Have you not studied how Congress works and how the presidency works and how the Supreme Court works and the balances between them? Come on, it's extreme. I don't know. I think I think this is mad, but whatever. So okay. Let's see here. Okay. Let's see what we have here. I'm gonna go look at the current world interest rate probability sheet. 65.8% chance. Yeah, 65.8% chance of 50. Reverse psychology Z-Pack. That's funny. That's a good one. Bill Neal. Naive thinking, Kevin. See, if you're gonna try to insult me, you gotta give me a reason. Because the funny thing is, when you don't, it kind of just says I'm right. So, checks and balances require ethics. Yeah, I mean, don't get me wrong. I think there's plenty of corruption in plenty of parts around the world, but I think the average is not as terrible as thought in America. But who knows? Maybe I'm too optimistic. Let's see here. Checks and balances on Jan 6. What does that have to do with it? What does a riot have to do with the checks and balances between how laws are made on the country? I don't know what you're talking about there. So let's see here. Kevin wants to get rid of the Constitution. Nobody wants to get rid of the Constitution. I don't even know where that's coming from. All right, let's get back to something. You see Gavin Newsom and Elon posts to each other? Oh, God. No, actually, that might be kind of funny. Let me see. Gavin. And I don't like Gavin Newsom. Like, let's be clear. But I'm not so extreme to freak out back and forth. I mean, it's not a surprise. Okay, Gavin Newsom calls Trump a bully, whatever. Okay, like, yes, even people who like Trump are like, yeah, he kind of is, but we want a bully as a leader, So, you can no longer knowingly distribute an ad or other election communications that contain materially deceptive content, including deepfakes. Yeah, I mean, Elon's argument to this is, the Democrats are trying to make memes illegal. The problem was, like, people believe deepfakes when they hear it. When they hear a deepfake of, like, a Taylor Swift or somebody, saying something they didn't. People believe it. I mean, you could have a tiny little disclaimer somewhere that's like ad or parody or whatever. And I mean, I even miss stuff like that myself sometimes. So, I mean, I don't blame this. I don't think it's necessarily a terrible thing. I know people are like, oh, that's censorship. No, it's like trying to prevent people from falling into traps. That's the whole point. But why are job cuts happening? Isn't it because consumers are trapped financially, credit card debt at all-time high? I mean, I don't think credit card debt at all-time high is leading to job cuts at this point. Not yet. We're not that far down the cycle. That would be like once you start getting real defaults that start shaking through everything. Job cuts, I think job cuts are happening because businesses, frankly, overhired because it was so hard to get employees. Then you overhire, you overtrain. Now all of a sudden you're taking it in the margin and you're like, damn, people are starting to be more choosy for our goods and services. People are less loose with their wallets. We're coming upon a tougher time. All right, poop balls. Let's just, let's just stop hiring. And so businesses start to stop hiring. And then somebody's like, hey, I'm going to leave. I'm going to go do my own thing. I'm going to start my own company. I'm going to go to another opportunity. A lot of businesses that are hearing that right now are like, thank you. I didn't have to fire you. Thank you for leaving. Because the businesses may have loved the person, but, you look and go, like, shoot, we could deploy this capital and use it to pump margins or make a business that's not profitable or whatever. So I think that's what you're seeing in some of the labor data. Just don't make a meme in California or you're arrested. Yeah, I don't think that's the idea here. I mean, there are plenty of opportunities for memes, right? I think what the argument is, like, don't manipulate something and make it look like it's not a meme and make it look real, right? Hypothetically sitting at 3K shares of Palantir. Oh, good for you. Thinking of taking initial investment out to have some cash. Too aggressive. I mean, I think that's wonderful. The tough thing here is, you really got to look at like a whole portfolio, right? Because like, what is that? 3,000 shares. That's great. Isn't it like 900K? Oh no, 3,000 shares. It's $108,000. Oh, okay. I don't know where my head is right now. I don't know. Anyway, so it's about $100,000. So you have to ask yourself, like, this is the tough thing. This is why you can't do. It's illegal to give like blanket financial advice, right? Because everyone's situation is different. So you have to analyze this. You go, okay, well, what's your net worth? If your net worth's $10 million. Who gives a shit if you have a bunch of gains in Palantir at 100K? Congratulations. But who cares? You could lose literally all $100,000 and you won't even notice it. You could lose $5 million and you wouldn't even notice it. Like, it'd be fine, right? I'm not saying that's what you want to do. I'm just trying to be extreme, right? So, you know, if your net worth is $150,000 and 108 of that is in Palantir and you're making $50,000 a year, well, goddamn, you know, you might have a different answer as to what to do there. So it all depends. It's actually, it's why we're starting Stock Hack. You know, it's so that, you know, through my team, you can get actual financial advice. Essentially, the stuff that I teach, but looking at your whole portfolio and then go, like, if I had your whole portfolio in front of me right now, I'd be like, oh, okay, yeah, like, you know, does it make sense to maybe go some bonds, some VOO? You know, hey, are we at the point now where we have some money to get our first rental property? How about our first home? You know, hey, do we have some money here to consolidate some debt? Do we have some money to fund your retirement accounts, right? These are things that can't really be answered in a quick super chat, but hopefully they give you enough inspiration to help you answer that question. As far as the company itself, you know, the biggest problem that people have with selling a stock is the FOMO that it's going to keep going. I guess let's put it this way. Let's go do a quick little fundy on Palantir. Palantir, you know, has recently had the S&P 500 bump. I love the company. I think it's a great company. I think it's some of the best artificial intelligence that exists next to Tesla. And I actually think they're like a real AI company. So I'm a big fan of that. That said, they're expected to earn about 36 cents as far as earnings this year, which means they're selling for 101 times earnings, which is pretty rich. And if I add together their growth rate over the next 4 years that's projected, I get a projected Wall Street growth rate of 88.6%. And I divide that by 4, I get an average growth rate of 22.51. So I am now trading for a peg. Holy shices. I'm trading for a peg of 4.5. Dude, the valuation on Palantir is nuts. Like, it could half and still have a fair valuation. Like, it wouldn't be cheap if it went down to $18. That's crazy. That's crazy. Absolutely wild. So, yeah. Potato Burger says, get out of evil Kevin arc and come back. What? What are you trying to say? Summer says, you have to understand the past, but be cognitive and observant of the present. Ooh. What's this? How do you feel about credit spreads in the coming Fed pivot? It's just, it all comes down to if you're pricing in recession or not. You know, that's all what it comes down to. The spreads skyrocket. Can you analyze Dollarama, a Canadian dollar store? A Canadian dollar store, we call that like a nickel store in America. With an 18% net margin, but a lot of debt. Why do you think Dollarama is doing super well while stores in the U.S. like Five Below, Dollar Tree are suffering? Happy Fed Day. I mean, do they really have that much Dollarama investor relations? Do they really have an 18% net? That seems remarkable to me. What is Dollarama anyway? I mean, I'm assuming it's a dollar store. But I don't know anything about this. So let me just look at their financial statements. 9/11, they just had some financial statements. Dollarama net earnings, yeah, you're right. Look at that. Wait, income taxes. Okay, yeah, that's off. Okay, fine. EBIT, net finance, operating income. Wow. Well, honestly, I mean, this is pretty impressive. Their cost of sales is like, I mean, their gross margin is almost 50%. This is phenomenal. You know, whatever they sell at Dollarama, they're able to buy so freaking cheap. It's their top line is the reason they're doing so well at the bottom line, in my opinion, because their COGS are so low. Their cost of goods sold. That's really impressive. I don't know what they're selling over there, but whoever's buying Dollarama stuff, you're getting ripped off. No, you're right. That's a really interesting question. So, you've got, what's your cash flow here? Oh, come on, Canadian financial tables. This is why we need GAAP. Oh, here we go. Cash generated, net cash used, plant proper equipment. Wow, I mean, this is actually spectacular. 380 million Canadian dollars in 3 months. I mean, that's like, 20 million bucks. But Lauren's half Canadian, okay? I can make the jokes. All right, so where's the balance sheet? So that means my kids are, what's crazy? I told Jack this, and he looked at me, he was like, what? I'm like, Jack, you're 25% Canadian. And he's like, that's cool. And I'm like, you know what percent German you are? And he's like, no. And he's like, I don't know, 25% as well. I go, 50%. And then I go, do you know how much American you are? And he's kind of standing there like, wait, what's left? And I'm like, 25%. And he's like, I'm more German than American? It's like he was about to cry. Yeah! Oh. Alright. So, cash equivalents, 271 mils, 300 with the accounts receivable, payables, oh lord. Yeah, they've got just enough cash to pay their current bills, and then they have plenty of inventories to cover. It's good. They're burning through their inventories to start paying their bills, which is fine. I mean, that's what I would do too at this point, because they have so much inventory. They're not... And then $2 billion of long-term debt. But, I mean, the cash flow... This one's not as bad as the dollar stores I've seen in America. Why? I don't know, man. Let's fly to Canada and figure out what the hell Dollarama's doing that the U.S. companies are not. But that's very, very interesting. Kevin is 0% American? That's right. I didn't say I'm not American. I'm just not like genetically any American. It's like all German. Anyway, so but it's kind of like it's kind of like race. You can't pick where you're born. You can't pick the color of your skin. It's to me it's the same thing. Where you're born is just the same as what color your skin is. I had no choice over that. So, what do you think about the 10 3-month yield curve being inverted? I don't think that really matters as much. I mean, mostly because the 3-month curve is basically just where Fed rates are, right? So like that 3-month will move instantly in the rate cut today. So that inversion will close the gap very, very, very rapidly. So I'm I don't really generally look at that because you're just basically comparing to the Fed rate. But yeah, I mean, it just shows the extremeness of the tightening we've gone through. In terms of the 10-2, we're 5.2% right now, or 5.2 basis points positive. Talked about Unity's inverse head and shoulder. Is the ship turning? Ooh, is the ship turning? I don't know. Is Unity actually profitable now? I don't know. Unity. I mean, you go out to the week chart. There's no head and shoulders there. There's just like, damn, what the hell, man? What is this? So let's see here. Steve says it's probably because of the crazy amount of immigration we have. Yeah, somebody made a comment the other day, and they said, have you ever seen Indian coffee? And there's a whole store dedicated to Indian coffee in Canada. And it looks like this. It's a bad immigration joke, but it's a joke that people make because that is a common sentiment that is out there. Okay, so Anyway. Okay. Unity is profitable. But why is their revenue going to, or their earnings are expected to decline next year? See, the trouble I have with Unity is that I'm worried that Unity is kind of going to get replaced by AI, not enhanced by AI. Yeah. So, is today a slow news day? Yeah, I mean, pretty much. But, well, I mean, like, yesterday, I'm like, do I want to read any institutional pieces and, like, make another video on, like, here's what JP Morgan says or whatever? And honestly, I decided not to because I'm like, bro, none of that freaking matters because it's all going to get reset after the Fed meeting. So I'm like, I'm just not going to waste anyone's time. I mean, yeah, I think you saw yesterday. I only posted, like, an 8-minute video. It's like, all right, peace. Actually, it wasn't even 8 minutes. It was, like, $7.30. I had to do that while I was driving to the dentist. Well, so we'll see. Microsoft will buy Unity, maybe at a discount, huh? Jack's 100% American. He was born there, but yes, he has near 100% European ancestry. Well, yeah, depending on how far back you go, that's fair. Kevin, so you are bullish on houses with cuts? Well, I mean, I'm bullish on a certain type of real estate, right? Like, I think y'all know me. Real estate's like an easy bread and butter for me. You know, it's not like a rocket ship, Friday YOLO call option. It's just an easy 20% over and over and over and over and over again. And that's on real estate, which you can leverage, which is really incredible. Like, imagine when rates are low and house hack can leverage. Oh my gosh. You know, right now, all the real estate we own is cash. And we've been getting third-party appraisals on our real estate. And our projection was that we would have 20% wedges on the deals we're buying. I think right now our appraised wedges are like 19.98 or something like that. It's crazy. It's basically indistinguishable from 20%. And it's remarkable because it just shows that, like, even with third-party appraisals, what we said we would be able to do, we're doing. You know, so, like, cool. Investors gave us 50 million, and we were able to turn it into 60 with, you know, whatever, 2 in costs or 2.5 in costs or whatever it was. And we actually think we can get those costs even lower to where we're profitable this year. So, and I mean, that's amazing. So, and that's without selling any properties. That's just, you know, profit from just you know, rents, basically. Which is amazing because if we can take, you know, $10 million batches and turn them into $12 million, you know, think about it like a box. Every time somebody puts $10 million into house hack, we turn it into 12, you know, minus obviously some cost of goods sold. But if our cost of goods sold are covered by rents, then it's basically you put 10 in, you get 12. You put 10 in, you get 12. You put 10 in, you get 12. It's the best machine that exists. It's fantastic. As long as we can keep it going, obviously. So, yeah, I'm very bullish real estate, but I'm bullish a specific kind of real estate, you know? It has to be in areas that are, you know, going to hold their value, in time. Yeah, so I think that's pretty important. Anyway, 10 minutes to the bell here. But yeah, as far as cuts, I mean, you know, we're going to increase inventory with cuts too, so. Let's see. I'm a bear, says somebody. 50% TLT, 50% TMF. My God, TMF is very, very risky because you know, the leveraged concerns. Like, you have a bad day on TLT, like yesterday or today, at least so far. You know, today could reverse very rapidly based on what Powell does. But it's harder to get out of the hole with the triple leveraged. So I always get a little nervous about the triple levs. I'd rather have options than the triple levs for a longer period of time. So somebody's talking about Mike. What is this? The student. Let's see here. How's this billion per? Oh my gosh, there's so much tweeting here. What is this? Inflation virtually non-issue. Jobs now dominate the Fed's dual mandate. Is this his piece? This guy posts a lot. Monetary policy narrative. in the U.S. has undergone a rapid shift. Federal Reserve needs to promote the effective goals effectively. Inflation is now virtually a non-issue. And true inflation is near cycle lows. Inflation's on a path to 2%. Deflation being exported from China. All right. Yeah, I mean, we've known all that. Somebody says, where my money's allocated. 40% Bitcoin, 40% of the home I own, 10% VO, 10% cash for monthly income paying bills. I sleep very well. Would you? No. No, I don't know. It depends, again, what your net worth is. I mean, I guess I could probably backward it up, right? If 40% is the home you own, and you're literally parachutes BTC in your title. My goodness. Okay. So 40% is the home you own. Well, let's just guess. Okay. So we're gonna guess this together. So let's just give you a benefit of the doubt here and say you own a home that's 50% above the average home price. I'm gonna go with $690,000. Okay. 1, 2, 3. 40% of your wealth is in that home. That's probably your equity in it. So let's say your equity is about $300,000. So that means you have $300,000. I'm guessing this, right? $300,000 in your home, $300,000 in Bitcoin. I'm guessing. I'm trying to be generous because you could also have like a cheaper home, whatever. And then that means you have $60,000 in VOO, and you have $60,000 in cash. So I like the $60,000 in cash. That's great. Love the $300,000 in your home. I love the 60 in VOO. That's cool. This is actually, that's not bad. That 300K in Bitcoin, I think we had to have a conversation about that one. No, but I don't know. This is a total guess. I don't know what your income is, right? So I can't advise you. I don't know because it depends. What's your income? If you're making $1 million a year, dude, put it all in Bitcoin. I don't know. I'm making an example here. So I can't give you personalized advice because we don't know. You know, if you're making $50,000 a year and you have, 6 times your annual gross in Bitcoin, which, in a recession, you're probably going to lose 60% of, you might not be recession hedged here. Maybe you look and you take half of that and you put it into a recession hedge. I don't know. It all comes down to your income. It all comes down to your age too. I mean, how old are you? Like, what if you're probably not, but let's just say you're 80 years old and this is your portfolio and this is your retirement nest egg. Holy crap, you're screwed. Please sign up for stockhack.com and get some actual financial advice. Now, on the flip side, if you're, 18 years old and you own a home and you own Bitcoin, you're 18, bro, you can go to 0 and be fine, because you're 18. So, yeah, I don't think an 80-year-old is 40% in Bitcoin. This is not being extreme. I don't know, right? So all of this matters. Like, there's so much more that goes into portfolio allocation. But hold on one second. Let me see if, at the moment I'm driving in the UK. Okay, well, maybe you can answer your phone. Hold on. I have 5 minutes until the bell. Come on, lady, answer the phone. She never does. This person just never answers the phone. She's like, don't bother me on my vacation. I'm like, woman, you put a property on the market the day before leaving to your vacation. Hey, Charlotte, it's Kevin. How you doing? Good. Hey, I got your message. Totally fine. And I don't want to bug you on your vacation, and I know, we've been texting. Thank you for your help, by the way. Hey, just wondering, what's your offer deadline? Yeah, I know. I hear you. What if we just take the prepay? Like we'll do the prepay. It doesn't matter to me. We're okay with that.
Okay, well then you need to write that in.
Okay.
So that's what I'm saying. So I need that taken care of.
I can do that. Oh, that's easy.
Yeah, okay.
I'll modify it the way you said in the text. I'll take the prepay and I mean, are we going crazy? I mean, I'm sure we are. I know you're getting blown up. I know you got 12 offers. Is it going north of 1.7 already?
No.
Okay. Let me revise this for you. I'll get it to you. Would it make it easier if I just email it to you or DocuSign it to you? Because if I know you're on vacation, I can drop in a DocuSign even for you and your clients if you want. You know, I don't want to step on toes.
I don't want
No. I know that. No, I totally understand that. I'll revise it the way you said in the message, and I'll put this prepay in. But I can make it easier for you if you wanted to, and get it all set up in DocuSign for you. Okay.
I'm so fried.
I know, and you probably have jet lag too.
Well, no, I'm working. I'm getting up all times to do stuff because I've got lots of commitments. It's not actually a holiday. I'm doing a lot of stuff over here. Then I'm working.
Oh.
8 o'clock and I'm getting night. So I'm. So
Oh, I'm sorry.
I don't even know what you're talking about.
No. Yeah, exactly. Just put the offer in. I'll put the proof of funds in. Everything you need. I just basically just want to make your life easy and your client's life. When you texted me the lockbox code, I went the same day. Let me put it this way. I tried using the little chairlift, and I couldn't get it to turn on because I brought my my 9-year-old. Sorry.
That's fine. You've got to use there's a key, but there is actually
The handheld.
on the handle. Yeah, on the handle there's a little down.
Oh, okay. Well,
Right hand side.
but there's my proof I was there.
There you go. That's awesome. Okay, that's helpful. All right, if you could, yeah, if you get that in. I've got about another 3 hours of driving.
Oh.
Then I get to get in. I've got about 3 hours already. And well.
You're amazing. I'll do that.
Okay, no, thanks so much.
Thanks. Enjoy your drive.
Thank you.
Bye. Cool. That's great. Easy. How to solve real estate problems. Here's the secret. There is no real estate problem. There's never a problem in real estate. Let's go get the deal for house hack. Yes. All right, let's get the bell.
There does seem to be this growing sense that what you see on social media is increasingly removed from reality, and that a lot of Americans are beginning to think that way.
It is amazing how when you'll mention something that you read on a site. I mentioned something I read on Reddit to a couple of people, and they didn't even listen to me. When they heard Reddit, they said, well, like, why do you read Reddit? A lot of people really hate TikTok here. They think it's influencing younger people's views. I'm not sure exactly how it's influencing. I just find, people don't even like it. They're hoping that Shein and Temu get a comeuppance by Amazon. That's another thing. You don't find anyone who is championing China out here. I mean, like, no one.
Let's get the opening bell here and the real-time exchange of the big board. It's the Susan G. Komen marking National Breast Cancer Awareness Month beginning October 1 at the NASDAQ. It's SS&C Technologies, a provider of financial services and healthcare software. Jim, speaking of financial
Let's see what we got here. In the real estate courses, in both the sales and the 0 to millionaire real estate, we talk about talking to people on the phone. Like it's not a hard business, folks. It's a people business. I think that's what people don't understand. People from the stock market, they don't understand real estate because it's so different. It's like a totally different part of your brain. It's a human category. It's not it's not this. What's a cash flow statement? Anyway, so what we got here? Enphase popping off 1%. Tesla, nice. Look at that. Nice. So look at that. You've got Tesla up 1.4, very cool. Then you've got what is this? Oh, look at that. It's really trying to bounce here. Oh dear, here comes a spammer. Okay, you're banned. Golly, look at that. Bitcoin spam on YouTube comments now? Bye. All right, so what is this? Okay, Q's up 20 basis points. You know, they were negative. They were slightly negative. So you had a little bit of a run there in the pre-market, which is pretty good. Unity coming down a little bit. What is this? First Solar, the energy trade popping up a little bit. Let's see here. Enphase rejecting at 119.88. Okay. Tesla. Oh, what time is the Fed meeting? It's at 11. Why don't I buy Bitcoin, says somebody in the chat? Well, mostly because I think that if we go into a recession, Bitcoin's going to be one of the worst performing assets. I hate to say that. I'm not trying to, piss off the Bitcoin maxis, which it's just a reasonable thing to hedge for, right? Like if you have a lot of exposure to Bitcoin, it is reasonable to assume that a risk asset will do very poorly in a recession. Now, the money printing that comes after the recession, which will be glorious, the quantitative easing, that, my friends, would be glorious. That money printing is going to, be spectacular and very good for something like Bitcoin. So, my expectation, no guarantees, obviously. Okay. When recession, in your opinion? I mean, I think we'd really know within the next, 6 months. Should be enough data to know. So we'll see. All right, come on, Tesla. Can you hold on to any of this? What else we got here? LiDAR, laser, some of these low vol trades are moving a little bit. Palantir's moving back up. It was down like 1.5% in the pre-market. It's coming right back up. Enphase, look at that, over 120. I mean, this had like a $15 move here. Somebody here says, you're wrong, BlackRock is not selling Bitcoin anytime soon. Its ETH ETF is coming soon. Man, come on, man. You don't even understand how an order book works, if that's what you're saying. This has literally nothing to do with BlackRock selling or not. It has to do with losing buyers and then having some forced sellers. And that's how you get a price collapse. And it happens very, very fast. It happens faster than you can even position yourself for. Steve says, sell Bitcoin, buy gold. I actually like gold in a recession. Gold in a recession is an excellent trade, in my opinion. An absolutely excellent trade. But let's be clear. The only reason BlackRock is, sucking everyone off in the Bitcoin space is because they want you to buy their ETF. It's free bips for them. This should be so obvious. Like, if people actually think the people at BlackRock give a flying hoonie if Bitcoin goes to 0 or goes to 1 million, it doesn't matter. They just want the bips. So whether you think it's going to 0 or you think it's going to 1 million, they got a product for you. It's that simple. Like, how do you make money in the stock market? You market make. You have a BlackRock fund. You IPO in 2021, some profitless tech company that loses 99% of its money. That's the crazy world we're in. So it's wild. I'm sorry, people sometimes don't like the truth. They don't want to hear it. I'm sorry. I can't help myself. I just can't help myself. Yeah. Him B says, SPAC, bro. SPACs, bro. Ken Henson says, just like your ETF, don't care if it goes to 0. Man, you got to be the greatest idiot, dumbass moron I've ever heard. And I'm not going to mention what my ETF is because this is not an ad for that. But actually, if you look at that ETF, it is so damn well, in my opinion, no guarantees positioned against a market downturn that literally the S&P 500 and the NASDAQ could go down 30%, and this would probably be down a fraction of that. It might even be up. There's a real chance it could be up. Like, the downside protection that is in that, because I am worried about a large correction, because I am hedging against, volatility in October, is extreme. And it makes you look like a fool to say that. It makes you look like a complete idiot to say that I don't care. Because you obviously haven't educated yourself enough to even look at the holdings. You're so dumb. Anyway, Enphase is selling off right now. That's interesting. So is Tesla. Tesla is selling off a little bit. That's interesting. I think people don't appreciate downside protection, right? Like, it's like if the market's going up and you have downside protection, you're an idiot. If the market's crashing and you have downside protection, you're an anti-bull and you're hated. It's like, how stupid can you be? That's not good. That's not good finance. That's just dumb. It's called dumb. I mean, look at the tweet I sent. I really believe this. That's why I said it. I don't tweet crap I don't believe. So look at this. I wrote the following. I fear the stock market has now fully priced in a soft landing with almost no downside protection. Either the odds of a recession are zero, or the stock market is on some kind of drugs. I'm hoping for no recession, but I'll sit out the FOMO. Okay? So, it's interesting to me I mean, it makes sense. I'm a big fan of Train America, grow, long America. I'm always a big fan of that. But there are periods in time where it's okay to hang out at the train station for a little bit. Wait for it to loop around. Be a little patient. All right, let's see what Jimbo has to say.
On a particularly strong case, but Jim, so much of this comes back to the judge, and again, back to market definition. To remind people, it is a $57 a share all-cash deal. There has been some question, given Capri's numbers have been particularly weak of late, as to whether once they get through this, if they do get through this successfully, whether Tapestry might still try to claim a MAC and lower the price. Why? Well, in the last conference call, their CEO said on Capri standalone results, yeah, you're right, the level of underperformance that they have announced is disappointing and surprising. That word surprising caught a few people. That said, if you were going to do that, you probably would have wanted to do it prior to any court case. But, Jim, that figures into the mix here as well.
Well, look, a lot of people are saying that maybe the FTC has given Tapestry a chance here to get out of a deal that they don't really need. The market is so fractured. There's so many companies in it. It was another one of these. I mean, I said that I agreed on air when they did it. I was just tired of the heat from those guys. I mean, it's like, all right, that's fine, enough. Let's take a look at it. I didn't think the FTC rank and file was at all interested in this case. What you mentioned the cross-examine. I'm not saying they threw it. I am saying that this was the case too far, where the professionals kind of said, you know what? Can we just stop going after everything? I mean, we got handbags. Is that what we're supposed to be doing? Handbags? I mean, Carl, handbags? There you go.
There's plenty of upside in Capri stock price should they actually emerge victorious in this deal. Despite, again, to your point, Jim, and the one that was made by the CEO would have not been good numbers at all from the company itself.
No, I mean, I think that the FTC should go to TJ Maxx, where David and I go, the one next door. You get all the handbags you want, and I got to tell you, there's some prices there that you would not believe. I always send my wife to Home Goods and to TJX, because that's where the prices are.
Speaking of TJX and Burlington and Ross, all three of those reiterate buy today over at B of A. Jim, we do have a couple upgrades of Victoria's Secret and VF Corp. Of course, all of that after retail sales yesterday imply pretty much a 3% annual rate of real retail sales growth. And in other words, inflation adjusted.
Yeah, look, I'm really glad you brought up VFC. Now, I had them on. I think Bracondero is engineering a turn right here, right now.
Boring.
The clock,
Boring. They need more coffee. I need more coffee, man. What is this crap? Where's my coffee? I have a little bit left. You know, I got real estate deals to write. Damn it. Actually, I already wrote it. Dude, real estate is easy. If there's anything I do in my life that's easy, real estate. Real estate. So easy. It's like shooting fish in a barrel. I love it. I really love it. There's the hell? I think I just heard some glass break out there. Somebody's breaking in, quick! Get the shotgun! No, it's someone in the kitchen. Oh, dung schlung. All right, everybody. Oh my gosh, I've never heard this one before. Holy crap, run for covers. Dung schlung. Oh, everybody listen to dung schlung. Also, what is easy for you is scamming people with house. House Hack's a scam. House Hack raised $50 million and made 20% buying wedge deals, turned it into 60. That's a scam. Oh, it's a scam. Hey guys, breaking news. I'm a scam. Fucking moron. All right. So, all right. What do we actually have going on here? Bonds. You got some profit taking in bonds. You got end phase bouncing on the 119s. You got let's see, the Qs at 13 basis points. You got Tesla at 20. Basically, that's positive. It's trying to hold on. Apple actually recovering a little bit. Look at that, dude. Perfect bounce. Perfect freaking bounce. Look at that. Right at the 117.23 line, it regularly bounces there. Regularly. Nowadays, if somebody is doing better than you, they're a scam. That's a scam. That's like, it's almost like a compliment these days. If you want to be an entrepreneur, you want to get to the point where be like, man, that's a scam. They got the listing. What? That's a scam. How come I didn't get the listing? I got scammed. BTC, look at the reject that BTC had, by the way. So go on, look at that. You're right here, 60,719. Coming right back down. Well, it's trending back down to that 57,580 line. Yeah. Lauren puts up with this? Dude, Lauren's great. How she puts up with me, I don't know. I don't know, man. Oh yeah, make sure to join my next scam. Stockhack.com, where you could get actual financial advice from myself and the team. And we're actually putting together a beautiful, like, checklist or like list of things that are just included in sort of the monthly thing. I mean, from like reviewing lease contracts if you're renting a place to your closing statements, your loan statements, the comps on your home that you want to buy or on your rental or whatever. Like, there's some really incredible things we could do there. Portfolio analysis, portfolio management at a lower BIP fee, if you wanted that, 69 bips. But it's going to be a really cool service. I can't wait to put that on, update the website with all that. It's going to be really good information. Should have that up within the next few days here in terms of the chart and information on that. So that'll be cool. Nope, there's no coupon code today. No coupon, sorry. No coupon. Although with StockHack, what we'll probably do is if you pay a year up front, you'll get a month free. Like, we'll probably do something like that, but that'll be the extent of a coupon. Look at that super micro one. I wonder if there's news on this or if this is just momentum. But if you're looking for a momentum trade, look at super micro right now. Holy smokes, coming out of nowhere. 459. Let's see if there's any news on this. Let's see. Review life insurance policy. Yeah, that's part of it as well. Yeah, Will you go live with the Fed? Bro, is the Pope Catholic? Do bears poop in the woods? Of course I'm going to go live for the Fed. Super Microcomputer started with a buy rating at Needham on first mover advantage in AI. You got to be kidding me. That's like the dumbest thing I've ever heard, Needham. The Super Microcomputer stacks together server racks. They're not an AI play. It's so dumb. I've been saying it since it was $1,000, and now it's 50% of that. I'm like, this is stupid. Like, I'm about to start server hack. I'm gonna start server rack hack. Oh, that's it, rack hack. Oh, rack hack. That's what we're gonna do. And we're gonna have a giant picture of some really nice racks. Bro, rack hack's $3,000. Come on, man. I ain't got $3,000 to spend on a freaking domain. Fine. MyRackHack.com. Yes, it's a penny. My double rack hack. Hack your rack. Ay. Let's see here. Plenty of racks. Tell us about Palantir. We just talked about Palantir. Hit the rewind button. Meet Kevin live. So when were you complimenting Lofty AI when you I never complimented Lofty AI. That is the dumbest thing ever. What they're doing, that is like, you got to look at like their actual scams, and then there's like, oh, they're just doing better than me. Look at Boxable. Look at my Boxable video. That's a scam. Look at Lofty. I mean, at least the last video I did on Lofty. That's like full like tardation. I didn't say the full word, so it's okay. That's like, you have to be so dumb to fall for, like, that is just, I mean, it's just like, if you just look at the facts, like, there are products and services, and then there's scams. So, all right. So, let's see here. What else we got here? Enfadizzle, IWM's rising up 40. You got United, Tesla. I'm just having trouble keeping it up today. Come on, man. Give me a trade here. Yeah, oh, goodbye, Super Micro. Somebody decided to buy it. They're going to lose lots of money. Bitcoin going a little bearish here before the meeting. I do suspect there'll be a lot of profit taking before the meeting. I wouldn't be surprised if you have stock market lows before the meeting. And let's see. Ethereum's trending down. Hey, look, Bitcoin shorts up. Do I have the real estate course to get real estate analysis? Do you have to? Yes. Dude was threatened by Lofty AI. Lofty AI had nothing. Lofty AI is like, they look at what I said and they're like, ah, damn, huh? Ah, sorry. We got nothing here. And then the loser from All In, what's his name? Jason. He's like, he called me and he threatened to slice me up. He's like, take that video down or I'm going to slice you up. I'm like, all right. Bring your knife to my semi-shotgun. I got slugs. And I also have, where's my dagger? My dragon dagger. I gotta find my dragon dagger. All right, what else? This is boring. There's nothing happening today. Come on, man. End phase is holding on to the 120 line. IWM. Let's see. Gold getting rejected somewhere? Let's see. Let's see what's happening. Okay. How long does it take to impact mortgage rates if Fed lowers rates? A day? Like, it depends. Like, right now, mortgage rates are going up. So, mortgage rates aren't impacted by the Fed. They're impacted by the 10-year Treasury yield. So, and then it usually shows up in your loan pricing within a day. So, today, you know, people are dumping bonds going into the Fed meeting because they're taking profits. Like, this is very normal. I mean, look at what the 10-year has done over the last month. It's straight down. You know, here, let me scroll down a bit. There you go. The 10-year yield is straight down over the last, you know, couple months. So, of course, people are taking profits going into the Fed meeting, and that's why yields are up 4. But you might get to the Fed meeting, and you might go from positive 4 to negative 10 basis points instantly, depending on what the Fed's doing. I actually think because we're up 4.3 basis points on the 10-year right now, you're probably, no matter what the Fed does, going to see this go down. It's just my guess. But I think yields will go down after the Fed meeting. But yeah, I mean, you're always going to have profit taking right before. Usually you get some poopies. Let's see here. Dragon Dagger. Where is that? What? That's crazy. Bruh, hold on. Hold on. I had to put that away because you don't get to see my shorts. Hold on. Okay. First of all, I have 7 kids, so I got 7 of these. Does anybody know what this is? Huh? Anyone? Come on, focus. Focus. Oh my gosh. Dumb camera. Please, Canon. There you go. Anybody know what this is? Oh, it says it. Oh, I hope you didn't see that. Anyway. This is my Dragon Dagger Poison Tip. Alright. IWM. Peaked out. I don't know anything about Minnesota real estate. Somebody says Tesla and fire emoji. Well, it must be going up. Tesla. 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 Max says, lose from all in? You really are out of your mind. No, you know who's out of his mind is the guy who says he's going to slice me up for making a video. That's a loser. I don't know what a loose is, but how about Hack Tua? Oh, let's go. Yes. Yes. Recession Hack. That's the hedge fund coming soon. Make sure to subscribe. Are you going to have Sarah on Rack Hack? Oh, stop. Stop. What does gold do after rate cuts? Depends if you're going into a recession or not. Oh boy. So it's a recession you want, huh? Verizon cutting nearly 5,000 jobs. That's true. How would the market react? 25 versus 50. Okay, so 25 versus 50. Let's go with... So my take is, obviously the market is concerned right now about a 25er, right? So if you're concerned about a 25, then markets might start trying to write that in now, and you start getting some selling in markets. I think that's why you're going to have a little pressure going in. And that's also, I think, why you're getting a little bit of a sell-off in bonds, because that risk of the 25 is getting priced in. I don't think you're going to get a 25. I think you're going to get a 50. I think when you get a 50, it's going to be really good for bonds and potentially some rate sensitives, the end-phase Tesla and that. But the question then becomes, does a recession narrative take over? But I think Powell is going to be cautious about that. You know, he's going to be like, oh, the economy's fine, no recession. But how the market reads that, I don't know, man. I don't know. That's going to be interesting. Let's see. Jack just bought his first house. Congratulations. What valuations do you see Rocket going to within the next 1 to 2 years during this rate cut cycle? Yes. I'm bullish on Rocket. I'm probably biased on that, but I actually am bullish on the mortgage companies. Look at that reject right at the 230. Let's see. How much panic would there have to be if there was a 75 BP cut? I don't know, but honestly, there's not going to be a 75 BP cut. You know, the Fed usually likes to really guide, 25, 50. They generally like to really guide. And the fact that you're at 65% odds of a 50 right now suggests they're probably not going to try to screw with the market, and they'll probably go 50. But where you get real estate leads from when you were a local agent? Your mom. You got to check out, what's it called? The Real Estate Agent Sales Course. Yeah, that's a good one. Yeah. Take a look at that. And look at, you know, the way to, the thing, this is free advice. The thing that you have to understand about real estate is it's an in-person business. It's a business that requires belly to belly. And people don't like that today. You know, especially like younger, newer agents and stuff. People don't like people just want to make phone calls from their office and pretend like they're working. That's really difficult in a sales business. That's not going to convert. You got to work with people. So that's pretty important. So, okay, what else? Tesla, we've got, yeah, still rejecting over here. What do you see institutions doing with a 50 versus 25? Again, it's all comes down to the odds of a recession. That's it. Look, no recession. It doesn't freaking matter. If there's no recession, you want stocks. You know? If you think we're going to a recession, you shouldn't own a single damn stock. Could Open Door be a successful business model? I think, and this is my bias, I think HouseHack and HouseHack's model will bankrupt Open Door. So I think Open Door sucks. Quality sucks. The business model, I get it, but it'll get replaced. It'll get competed away. It'll work. I like the technology they use. Their app is good. How seamlessly they integrate DocuSign is good. Unlocking doors, great system with the app. They have some good technology, but what they're actually doing in real estate will get competed away. It'll take time. Like, they're not going to go bankrupt anytime soon. It'll take time, in my opinion. It'll take time. But, yeah, I'm calling it 100 basis point cuts. That's not going to happen. That would be crazy. How do you mentally prepare to wake up earlier in the morning? How do I, if you have, okay, email contact@mketf.com, and then you can get some answers there. How do you mentally prepare to wake up earlier in the morning? I wake up at 7 a.m. but want to wake up earlier to get SH90 done. Well, you have to have, like, a checklist of crap you're going to get done. So, like, you know, I will get XYZ done by a certain time, otherwise I'm a loser. So for me, that's, I need to show up for the course member live stream by 5:30 in the morning, otherwise I'm a loser. And so I, manipulate that by setting the start time at 5:25, so I could tell myself, I'm already live and videoing by 5:30 in the morning. And yeah, that, like, I think it's wonderful because it's sort of a tool that forces me to get the day started. And then there's nothing like all the beautiful support I always get in the comments to really get you going. So somebody says end phase to 125 today. Ooh. Kevin, 25 minutes behind in the chat comments. No, I'm actually at that. You wrote that at 7 a.m. It's 7 a.m. right now. What are your thoughts on silver in recession? I don't know silver as well, so I'd have to look up at that. But you could just look back at other, how silver has performed. I don't think it'll perform as well as gold, but I don't know. Maybe it does. So, Elon Musk status? Oh no, did Elon Schmelon just tweet? Too much politics, man. Too much politics, Elon. Let's just take a chill pill. Retweets Rand Paul. Yeah. All right. All right. Let's see what else we have. Would I buy puts? No. I don't have any puts right now. I think puts are it's tough. I mean, it depends. I mean, maybe going into the Fed meeting, but it's tough. Amam Sharma says, I'm a flip-flopper and supporting you. Let's go! A fellow flip-flopper! That's all right. That's all right. Deep down inside, we know where our true heart is. So that's why I'm in house hack, trying to diversify my portfolio. Ooh. Kevin, do you share or lease your jet while you're not using it? Hell no. The only person that uses my plane is me or my employees that I give it to when I don't want to go fly. But no, I don't lease it out. A lot of people do that. It's not a bad idea. You throw it into the charter programs. Helps pay a lot of bills. But I don't like other people on my stuff. I don't want anyone else pooping in my toilet, Only I get to do that. So, it's kind of like I wouldn't Airbnb out my house, That's mine. He'd let Sarah use it. Sarah could use the jet anytime she wants, but she'd have to clear it with Lauren. So that probably ain't gonna happen. Okay, what do we have here? Redfin, Tesla. I mean, things are just sideways. How boring. Restoration Hardware is down 1%. Apple's up 1%. Boring. Things are just stable, sideways. Enphase couldn't keep it up. IWM lost the lead. Isaiah says, that's micro cheating. Man, you think that's micro cheating? You're going to have a hard time being in a relationship. What, you think you can't be in a relationship and think that other humans are attractive? I mean, that's like called life, It's like you have to acknowledge and accept the facts of life, and the more you can be real with yourself and your partner, the greater success you'll probably end up having anyway. So, okay. Ooh, a little bit of BTC bounce. Is there any news? Because this is boring right now. There's nothing happening. I mean, it's pre-Fed. Like, who's going to buy pre-Fed? All I know is the short Bitcoin's going up. Bitcoin short up 63 bips. Let's go. Kevin, let's assume the Fed eases into stable growth and growth scares are priced out early next year. How does that make you not think a second wave would be more possible? Well, because I disagree that economic expansion equals inflation. People think that economic expansion is inflation. It's wrong. And I know you have the Peter Schiff-ian argument as, well, the money supply expanding is inflation. Well, no, colloquially, inflation, not, this is like your book definition. Colloquially, inflation is the increase in the prices that you're paying for goods and services. And the reality is, goods and services have become so available that even in economic expansion, I just don't see inflation at all. I mean, you'd have to have a shock to have inflation. And if we have a recessionary shock, well, that's going to be deflationary, not inflationary. Oh, what do we have here?
25 basis point cut, basically, in a 3-month period.
Right.
That's a lot.
It's a lot. But the argument is,
I mean, forget about getting started. That's going to be here before you know it.
And the market is anticipating it already.
Mm-hmm.
So that could be already priced into the market at this point. If you look at where we are and why people are itching for cuts, first of all, look at PCE. This is what the Fed targets, right? Inflation. This has been the problem. Their preferred inflation measure is PCE, and it's come back down to 2.5%. Is it at 2%? That's expenditures. That's a kind of a different thing. But is it at 2%, which is the target? No, but it's at 2.5%, and it's come all the way back down. CPI as well. People look at the consumer price index for inflation. And it's come back. It was 9% at the peak, right? And now it's all the way back down into the 2 to 3% range. So there's been a ton of progress. And the other part of their mandate is unemployment, Carl, and that has come up. Now, it's not sharply spiking or anything like that, but it's from the cycle low. And Fed wants to get ahead of it.
Yeah. Lou Breen today points out there are going to be 2 more job prints before the Fed meets again. And Powell did say the committee does not seek or welcome further cooling in the labor market. And in Lou's words, if he didn't mean it, he shouldn't or wouldn't have said it.
I think he means it. The question is, how does he feel that they can best achieve that? Around the table, there's the unemployment rate. Again, not super high, the spike during COVID, but we've come off the lows, which is kind of hard to see on a monthly basis there. Look, there will be people around the table. Michelle Bowman, I'm thinking of, who's a Fed governor, gets a vote. Probably not in the 50 basis point cut camp. She's been hawkish along the whole way, warning about inflation. Think probably has come around to easing, but I do wonder if they go 50, if they'll get some dissents, which would be abnormal for this Fed. We also have a new voting member from Goldman Sachs, who's now the head of Cleveland Fed, Beth Comack. So there are dynamics around that table as well as to how they feel they can best get in line with the market and also get ahead of unemployment. Look, Atlanta Fed GDP now continues to rise, actually, in light of what we got yesterday on retail sales. Look what's happened. There's the blue line. So it's gone up to 3%. It's accelerating on GDP. Do we have to cut 50? Do we have to do a double at a time where the GDP is accelerating? Yeah, they don't target GDP, but that is something to watch.
Doesn't happen often, I wouldn't think.
No, it's
accelerating GDP and a 50 basis point cut in rates.
Not recessionary, right?
Yeah.
Meantime, Carlyle's CEO Harvey Schwartz on CNBC earlier this morning with our Leslie Picker talked about the state of the economy and how many rate cuts he sees coming.
Right now, when we look at our portfolio of data and the factors that affect the economy locally here in the U.S. and obviously globally, we see a vibrant economy. It's definitely when it's cooled. As I said, monetary policy has worked. I think the Federal Reserve has done an amazing job with a complex set of circumstances, but we see 3 cuts by the end of this year and then perhaps a pause. Economic activity should stay robust. Activity levels should continue to pick up, and then maybe 1 next year.
Let's get some more color from someone who's been in the room, of course, on Fed rate decision days, and that is former St. Louis Fed President Jim Bullard, now Purdue University's Business School Dean. Jim, good to see you. Happy Fed Day.
Happy Fed Day. Very exciting in the world of central banking.
Earlier in the year, you did say that 3 cuts, I think, was your base case. Has that been has that been changed in recent weeks?
No, I think they should go 25 today and 25 at signal 25 at subsequent meetings. I think the case for 50 is overblown here. You've got a pretty robust economy. You were just citing Atlanta Fed GDP now 3%. For the third quarter, we got an upgrade from the second quarter to 3%. So it's pretty fast growth through the middle of the year here. Unemployment insurance claims, sort of ridiculously low. Lots of things looking pretty good about the economy. So I just don't think it's the kind of situation where you have to go 50. So I think what they can do here is go 25 and signal that, hey, we're going to keep 50 in our pocket. And if things deteriorate, we're willing to go faster. But we don't have to right now because the case isn't really there right now.
I want to read you one of the notes out of Wells today. They write, the Fed needs to provide more certain communication. If not, they risk needing to add excess accommodation later in the cycle as uncertainty weighs on activity. Do you think it needs to be more explicit than usual?
I think the chair did a good job at Jackson Hole saying that, they were ready to get going. And I think he meant, at least my interpretation was he meant that you'd start a string of rate cuts, but they would be orderly and methodical about it because the real economy is actually doing fairly well. And inflation isn't all the way down to 2% yet. It has, yes, it's come way down and it's been very successful policy, but you're not all the way to 2%. So it seems like, and I would say another thing to everyone that's listening here, you got the 2-year already down a long ways. So in a big sense, market pricing is already done most of the easing. So really, it's the signaling that the committee still wants to see inflation go all the way down to 2%, and they're going to gradually ease here, but only gradually because they want to get that last bit of inflation out of the system.
Everything you say makes sense. I agree with you. The counter argument, though, that they're using for 50, if you're in the 50 camp, is the 2-year yield is at 3.6. So the Fed is offsides. The Fed is too tight. So why not just make the adjustment now in a bigger way, because it's going there anyway, given the inflation dynamics?
Yeah, in the first half of the year, I actually gave a talk at the University of Miami and actually made this argument that if you use Taylor rule type calculations, the policy rate was too high. They should start sooner, and then they'd be able to sort of glide into the 2% inflation target. They didn't do that. I just didn't have the data in the right position, I think, to make a move earlier. But now that you're here at September, I think going 50 would be very hard to defend. You've also got the SEP here. The SEP probably will indicate 3 rate cuts in a row of 25 basis points. So now how are you going to say, well, we went 50 today, and so we're going to skip one of the other meetings or something? I don't quite see how it's going to add up with the SEP. Sometimes the SEP does not go with the decision on the day, and then the chairman has to dance around that. But it seems to me like people will probably coalesce around 3 25 basis point cuts and keep in their pocket the option to go with bigger cuts later if there really is some deterioration in the economy. I mean, you're talking about an unemployment rate at 4.2, which actually ticked down in the last report, is certainly not a situation that seems to call for panic.
Among the more dovish in the 50 camp is J.P. Morgan, Jim. They're calling for 50 and a dovish presser. And their reasoning this morning looks at Cleveland real-time Fed forecast, which they argue implies peace. He had 207. I wonder what you make of this emphasis on real-time mark-to-market, especially in shelter metrics.
On inflation, they're saying 207 on inflation.
Yeah.
Yeah. I don't know. They've tended to want to, the committee likes to use the year-over-year core PCE, and there are reasons for that. I think the seasonal adjustment probably got out of whack during the pandemic. I'm not sure you can trust the seasonal adjustment as much, and so a real-time indicator like that might be susceptible to fluctuations based on seasonality that are kind of imponderable. So I think they want to look at the big picture. This is, policy is relatively slow moving compared to markets, and so you want to have your core indicator be relatively slow moving as well. And it's still 50 basis points above target, and probably will come down only very slowly over the next 9 months. So I think that a lot of this is to, how can you calibrate over the next 6 months or 9 months so that by the time you get to the second quarter of next year, inflation's right where you want it to be, and the policy rate has come right down to the neutral rate.
I guess the big risk here, Jim, is that every time we have a weak economic report, if they only go 25 and signal only 25s, it's going to be the Fed is behind the curve. The Fed is not doing enough. I mean, that course is going to grow louder, and financial conditions are going to tighten and make it worse.
Yeah. Well, markets have already put the easing in there, so that's if those that are concerned about the path of the economy should comfort themselves with the fact that the market pricing already reflects the easing. So that what the Fed is really doing here is following through on a promised easing path, but keeping open the possibility of moving faster, or if inflation turns around or gets stickier, to take a pause.
Yeah, I disagree with this. I'll explain in a sec.
It's a momentous day. You could play this different ways, but I think it would be hard to play the 50. If you go 50, then you have to say, well, what does this mean for the next 2 meetings? Are you going to go to neutral by January? Is that kind of the idea? 200 basis points by January? That seems awfully fast, considering that we haven't made all that much progress on inflation in 2024. Most of the progress was made in 2023. So I don't know. I think it'd be tough. It'd be better to just keep that in your pocket, I think.
Yeah. Even as we're talking, Goldman now taking Q3 tracker to 3.0. Jim, on a day like this, we cherish your insight more than ever. Thanks so much.
All right. Thanks a lot.
Jim Bullard.
As we had to break, here's our roadmap for the rest of the hour.
Yeah, I don't know. I disagree with this. So he argues 50 basis points is overblown, unemployment claims are low, super lagging indicator, makes the GDP reference. I expect that. And he makes this argument that just go 25 and then go 50. Okay, the problem though with that is if you go 25 and then you go 50, it's kind of jarring because then it's like, wait, so you should have cut more earlier? So you sort of jar markets. It's like, why didn't you cut more earlier? If now you have to go 50, right? So this is where the Fed has the opportunity now to sell a 50 story as, look, we're just being preemptive. We're trying to prevent further pain in the labor market. And we think we're so restrictive that 50 is reasonable now, but that doesn't mean we're going to do 50 at every meeting. Like Bullard's like, oh, 50 now implies negative 200 by January. No, it doesn't. He's basically saying that would be 4 50 basis point cuts. No, because you could go 50, then 25, 25, 25. Which is 125 basis points of cuts, which the market's looking for like 100 to 125. Let me see what the market's pricing in right now for January. Market right now is pricing in 625s. Oh, that's 50. 150. 625 is being priced in by January. So that gives you for this year, let me see what this year is. This year's pricing in 4.5. So market pricing in for this year, 112. So I wrote down between 100 to 125. The pricing in 112, which is exactly in the middle, 112.5. So yeah, I kind of disagree with this Bullard analysis, but we'll see. I mean, we'll know in a few hours. You know, good. 3.5 hours, my friends. We will have the answers. So, kind of exciting. All right. I think it's time to get to the course member live stream. So, stay tuned for a lot more updates from StockHack. If you want to be some of the first to hear about it, make sure you're signed up at stockhack.com. We're not going to be able to onboard everybody at once. So, the sooner you sign up, the better. We're going to try to orderly onboard. Otherwise, just like onboarding takes a lot of time. So, we want to make sure we do that orderly. But, yeah, the sooner you sign up over at stockhack.com if you're interested, the better. Go check it out. And, yeah, thanks so much for being here. So we'll push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. And phase, still holding on to 120. 1-2 dizzles. All right, folks. We'll go ahead and see you at the Fed meeting and the course member live.